Can we just go to that chart that Brad put out? I think that what a lot of founders don't quite understand still is that things are just never going back to 2021. I think a lot of founders listening to the top of the show where we're talking about inflation's under control, they see the market rally, Facebook's up 25%. They may be thinking, okay, we just have to weather the storm for 6 months or a year, and then everything's back to normal. And I think what's important to understand is that the market did bottom out about a month ago and is up pretty nicely. If you see here, this is the SaaS index. It's the median enterprise value divided by next 12 months revenue. And it was really beaten down about at the end of the year. At the end of last year, coming into this year, it was like 4 to 5x multiples of next 12 months revenue for SaaS companies. That's all the way up to 6.1 now. So you're talking about 20 to 50% rally for a lot of companies, which is huge. We're still below the long-term median, which is just under 8. Okay. But what people need to understand is that even if we revert all the way to the mean of 8, which I think at some point we will, that's still well below the bubble of 21 where they got to 16. So even if things continue to inflate, valuations will still never quite be where they were in 2021. And
if you think it's getting back to 12 or 16, it's not happening.
30.
Fetch is not happening.
For high growth companies, in 2021, you were in the public markets, you were seeing multiples of 30 to 35 times. Now those companies are maybe at 8 to 10 or 12.
I think the reliable way that we can look at this for the future is that we're never going to see these kinds of multiples again unless rates are zero and all kinds of tourist capital need to find a home to escape 0% returns in every other asset class. But if even the safest asset class now will give you 3.5%, 4%, this is probably the new normal for quite a long time. And we're going to be back in that early 2000s kind of mindset, which takes a lot of hard work to build value around.
We talked about this sort of whipsaw economy, and there's a lot of mixed inflation data. I think founders need to understand that there's a bifurcation. What's happening in the tech ecosystem is not necessarily what's happening in the overall economy. The tech ecosystem is clearly going through a reset and a recession. Job cuts are now the rule. Valuations are much lower. Whereas in the overall economy, we saw a jobs report today of over 500,000 new jobs. So the fact of the matter is that even if the overall economy avoids a recession, that doesn't mean that things are just going to bounce back.
Tech's in a depression/recession. Best case is recession for tech.
Tech is a boom-bust cycle, and we had a phenomenal 10 years of boom. Now we're in a bust. And so I would just tell founders, look, it's good if we have a soft landing in the economy. I wouldn't assume that that's going to happen. I still think there's a really good chance of recession later this year, but it almost doesn't matter for you. What matters is your business and the capital availability for startups, which is fundamentally different and will remain different than it was in 2021.